This is East Asia Tonight.
Good evening, I'm Mateli Edwards. Tonight's top stories. China looks to firm up strategic trade ties in Africa. Foreign Minister Wang Yi begins his annual tour of the continent in Ethiopia, home to the African Union. The United States pulls out of dozens of international bodies that include key climate and health agencies, saying they no longer serve Washington's interests. And Chinese authorities confirm they have scam kingpin suspect Chen Zhi in custody after Cambodia extradited that tycoon, also wanted by the US and the UK, to the mainland. And Taiwan grounds its fleet of F-16s for inspection as the search continues for a pilot 2 days after his fighter jet crashed into the sea.
If you lose your speed, then it might be a little bit harder to catch up. So that's the dilemma for the legacy OEM.
Ahead on the bulletin, NIO putting pedal to the metal in its first foray into Southeast Asia as part of a global push. What will the Chinese EV maker bring to an already crowded market? A Chinese Foreign Minister Wang Yi is in Africa on a 6-day trip seeking to boost trade on a 4-country circuit across the continent's east and south. Now, Mr. Wang's tour will take him to Ethiopia, Somalia, Tanzania, and Lesotho. China is Africa's top trading partner, a position it has held for 16 straight years. A trade between the two sides topped $300 billion for the first time in 2025. And CNA senior correspondent Tan Yuguan joins us live from Shanghai. Yuguan, walk us through what are some of the key items on the agenda for Mr. Wang's Africa tour?
Well, Wang Yi is expected to attend the opening ceremony of the China-Africa Year of the People-to-People Exchanges at the African Union headquarters in Ethiopia. He will also focus on promoting bilateral cooperation, exploring trade and development opportunities, and expanding people-to-people exchanges. Officially, Chinese officials have said that they hope the trip will reinforce long-term partnerships and deepen mutual understanding across the region. Objectively, when we look at it, the agenda for his trip is largely about mutually beneficial trade and with a little bit of optics in play. That's reflected in the states that he will be visiting. We have, for example, Ethiopia, which is Africa's fastest growing large economy. And then we have Somalia, which offers access to key global shipping lanes around the Horn of Africa. And then we have Tanzania, which is a logistics hub linking minerals-rich Central Africa to the Indian Ocean and in turn to China. As for optics, Lesotho, a small southern African economy squeezed by US trade measures. Now, Lesotho benefits from China's zero-tariff policies for the least developed economies and therefore highlights one of China's key foreign policy initiatives. Oteli?
And based on latest relations, how do you see China, wanting to shape its relationship with Africa?
From what officials are saying, it looks like China is keen to continue its no-judgment, trade-focused relationship with Africa. While China has climbed many steps above African states in the development ladder, diplomatically, China is keen to keep its allies in the global south in Africa. Allies which come in handy in international bodies like the UN Assembly, for example. This is reflected in a statement made by the Foreign Ministry spokesperson this afternoon. Let's take a listen.
作为全球南方重要成员，中非加强团结合作，不仅为双方迈向现代化提供加速度，也为解决全球性挑战贡献新智慧。非洲是国际合作的大舞台，中方愿同各方一道，在尊重非洲主权基础上，为促进非洲的和平、稳定与发展做出更多的积极贡献。
Now, she ended off with peace, stability, and development. And in that regard, one Chinese commentator noted that China has earlier announced programs to train more than 6,000 African professionals in security-related fields over the next 3 years and to bolster support for the African Union and regional organizations in peacekeeping, counter-terrorism, and maritime security. And the expert believes this approach reflects a core principle of China's modernization philosophy, that development cannot take root without security, and security remains fragile without development. In a way, in return for the diplomatic support, the training, in return for the diplomatic support and markets that Africa provide, China is offering Africa help to develop and an alternative development model to follow. China has the technology and the know-how to help and also benefits from its engagement with Africa. China, with cheaper tech products, also works better in the African context in some ways. There are stories, for example, there's this Nairobi startup I read about needing an AI chatbot to help maize farmers diagnose pests with a simple photo. A US cloud service cost them about $1,000 a month and train on American images. But using a China's open DeepSeek model, they could train a model with local images at a fraction of the cost. These are just some of the advantages that China has in Africa, and it would likely want to continue to play to those advantages to make friends.
Well, I'm afraid we have lost Yuguan there, but nonetheless, we got the gist of that report. Thanks so very much for that, CNA senior correspondent Tan Yuguan in Shanghai. President Donald Trump has withdrawn the U.S. from 66 international organizations after a review on participation and funding. Well, nearly half of the targeted institutions are affiliated with the United Nations, including agencies that focus on climate, labor, and migration. Among the most notable is the UN Framework Convention on Climate Change, the parent treaty underpinning major climate arrangements. Now, Secretary of State Marco Rubio described the organizations as wasteful and do not advance U.S. priorities. The move adds to a list of international bodies that the Trump administration has cut support for, including the World Health Organization and the UN Human Rights Council. The withdrawals mark a shift from how previous governments, Republican and Democratic alike, have navigated the United Nations. While Washington's participation in core global organizations such as the IMF, World Bank, and WTO are not affected. Well, the U.S. withdrawals mean these international bodies will receive less funding, prompting concerns about how ongoing programs may be affected. Now, China has condemned the U.S. seizure of 2 oil tankers linked to Venezuela in international waters. One of them sails under a Russian flag. Beijing and Moscow are calling the move a violation of international law.
美方在公海海域随意扣押他国船只，严重违反国际法。中方一贯反对缺乏国际法依据、未经联合国安理会授权的非法单边制裁，反对任何违反联合国宪章宗旨和原则、侵犯别国主权、安全的行为。
U.S. officials say the Russian-flagged tanker known as the Marinera is part of a shadow fleet transporting sanctioned oil. Reports say the vessel was empty when it was seized between the British Isles and Iceland. Washington has been pursuing the vessel since December. Now, American forces intercepted the second tanker that's carrying Venezuelan oil in a Caribbean sea. The U.S. Secretary of State, Marco Rubio, called the seizures part of Washington's 3-step plan for the country. The end goal to sell up to 50 million barrels of Venezuelan oil. Now, in an interview with the New York Times, Donald Trump says that Washington could be running the South American nation and extracting its oil reserves for years. Senior Minister Lee Hsien-loong has expressed grave concern about the U.S. military intervention in Venezuela and the longer-term consequences it could pose on an international system. Well, this comes amid what he terms a sea change in global order with intensifying U.S.-China rivalry, weaker global trade rules, and greater pressure on smaller states. Now, speaking at the IC's Yusof Ishak Institute's Regional Outlook Forum, Mr. Lee also shared how Singapore can keep itself safe from external threats. Sherilyn Seah with this report.
The US's strikes on Venezuela clearly contravene international law, and Singapore stands against such military intervention in other countries, says Mr. Lee. That's despite Venezuela's complicated situation with governance, drug and refugee issues.
That does not justify a military intervention by one country into another unilaterally and without any proper authorization. The immediate consequences, maybe it works, it's a spectacular military success. The longer-term consequences on the international system, I think that is something which we have to worry about. From the point of view of a small country, if that is the way the world works, we have a problem.
That warning comes as the world already grapples with deeper strategic shifts, with Mr. Lee singling out one major change, that the US has been more willing to act unilaterally to its national interest. On top of Venezuela, Mr. Lee cited the US's interventions in the Middle East and in Nigeria, which it has never done before. And now action in Greenland is also on the cards.
The longer-term consequences of these actions, even at the target, and the broader consequences of these actions for the rest of the world and for the global system, a system which is based on UN principles, which is based on the UN Charter, which is based on international law, which is based on countries understanding that you have to coexist with one another peacefully and work with one another, because going to war has grievous and very unpredictable consequences. I'm not sure that has been furthered by this environment.
When asked what small states like Singapore can do to mitigate risks and preserve sovereignty amid unilateral actions, Mr. Lee pointed to 3 ways.
First, make sure that the country economy is successful, because if you're broke and poor, you can't do anything about it. Secondly, look to our defenses. We've been spending about 3% of our GDP every year on defense for a very long time, previously even higher, and built up a credible SAF, Singapore Armed Forces. And we continue to do that, not to threaten anybody, but just to keep ourselves safe. Thirdly, work together with our regional neighbors, cooperating amongst ourselves to the extent that we can, and also using it as a platform to partner other economies and other centers of prosperity in the world.
That includes ASEAN, which Mr. Lee says needs to cooperate more closely to deal with external problems as one unit instead of 11 different countries, even while resolving difficult problems within, such as the Thailand-Cambodia conflict.
For the rest of the countries in the Asia-Pacific, the US is still a very important partner, security partner, economic partner, investment source, destination for further studies, so many interactions. But at the same time, these countries also know that China is a major and growing economic and more than economic partner and reality. And so what do they do? And I think all the Asia-Pacific countries must also be rethinking their positions carefully too. I think a lot in the Asia-Pacific will depend on how the US or how China decides that it wants to engage its regional neighbors and the world.
And while acknowledging that China has been making the right statements about multilateralism and rules-based systems, Mr. Lee hopes that those will be realized as real policies amid a difficult ride ahead.
Well, time now for a short break, but coming up next on East Asia tonight, US oil majors demand firm guarantees from Washington before betting big on Venezuela, even as President Trump seeks to overhaul global energy markets. And later, investor appetite for Chinese AI in focus as Tupu AI jumps on its IPO ahead of Minimax's market debut tomorrow. Hello again. Good to have you back on East Asia Tonight. We've got Roland Lim standing by with the very latest in business news. And Roland, so we now know that President Trump, he wants the US oil majors to pile back into Venezuela's oil sector. But then we have Wall Street there wanting more than just tough talk before actually writing those checks. So what is that about?
Yeah, US companies see huge legal and political risks in Venezuela. Senior executives say they won't pour in the billions of dollars without ironclad guarantees. Oil prices, let's have a look first. It is recovered somewhat. Brent crude currently $60.47 a barrel. It's up 0.85%. US market, West Texas Intermediate, up by 0.9%, recovering grounds after 2 straight days of declines. Now, that's as a larger than expected drawdown in US crude inventories prompted traders to buy futures, even as they monitor future oil supply out of Venezuela. While Washington is keen to get U.S. oil companies to invest in the South American country, the firms want guarantees from Washington, according to the Financial Times. Now, they are due to meet President Donald Trump tomorrow. Executives from some of the biggest energy companies are expected to press the president on providing strong legal and financial guarantees before agreeing to commit capital to Venezuela. Major players and investors also say the U.S. would need to backstop big projects. Meanwhile, Chevron is in talks with the U.S. government to expand a key license to operate in Venezuela so it can increase crude exports to its own refineries and sell to other buyers. The talks comes as Washington and Caracas progress in talks to supply up to 50 million barrels, I should say, of Venezuelan oil to the U.S. Remember, Chevron is the only American company that holds a U.S. license to export Venezuelan crude. It is seeking to amend its agreement with the U.S. Treasury Department to sell more of the country's oil. Shares in Japanese chemical manufacturers declining after China said it is launching an anti-dumping probe into imports of chemicals used in chip making. Japanese companies have carved out a nice niche supplying high-quality materials and equipment used in chip making. Shin-Etsu Chemical ending day down nearly 4%. Mitsubishi Chemical also lost 0.5% almost. At the same time, shares of Chinese rivals jumping. Tangshan Sunfar Silicon jumping by their limit of 10%, as did shares of Hubei Heyuan Gas. Shares of Jiangsu Nata Optoelectronic, well, that rose more than 2%. The probe comes amid strained ties between the two countries as Beijing steps up efforts to become more self-reliant in key technologies. We'll assess the economic impact of those sanctions with an expert in just a bit. Meantime, 3 newly listed Chinese tech companies ended higher, raising a combined $1.2 billion in a boost to Beijing's quest to compete with U.S. high tech. All the debutantes closing above their offer price. Artificial intelligence company Jipu AI 13% higher. Shanghai Iluvatar Core X, that's a semiconductor firm, closing up more than 8%, while surgical robotics company Shenzhen Edge Medical skyrocket 31%. The debut pipeline is growing. Another Chinese AI firm, Minimax, is also set to list tomorrow in Hong Kong as the financial hub aims to ride a new wave of AI-linked listings. Together, they're looking to raise more than $1 billion. Chinese authorities are fast-tracking AI and chip listings to strengthen domestic alternatives to advance U.S. tech. That's against a backdrop that has drawn issuers across the tech sectors. Experts say the trio's strong performance today is a sign Hong Kong can extend last year's IPO resurgence into this year. Electric vehicle makers are pulling out all the stops at this year's Singapore Motor Show. The 4-day event features a record 37 brands, and that includes the highest number of electric vehicles. CNA's Alexandra Anand with more.
The race to go electric is on at this year's Singapore Motor Show, and Chinese car makers seem to be taking the lead, accounting for nearly half of the EV lineup.
The Motor Traders Association says their dominance is a shift from 5 years ago.
The Chinese EVs are more reasonably priced. They provide value-packed features. They're very advanced in their technology. So I think this is a good platform for consumers to really study all the different EVs and whether they should change to EVs or not.
But it's not just the Chinese manufacturers ramping up their electric offerings. More than 95% of the brands on display are showcasing electric or hybrid models. This is up from around 70% last year. Analysts say the remaining 5% are likely high-performance ones that don't cater to the majority. A big focus this year is making cars smarter. With more than 30 new launches at this year's motor show, visitors are keeping an eye out for what's next.
I heard that Yi will be here, so I'm pretty keen on taking a look at that brand because I know that it's like the top tier in China.
BYD is quite up and coming, and in terms of the technology of the cars and the design is very sleek, very modern, and just excited to see what they have installed this time around.
They were among the early birds on day one, and organizers expect the crowds to thicken over the next few days.
All the brands experts are going to be here today over the next couple of days. They can speak to them, they can find out more about car ownership, they can find out about charging options, and obviously they can experience the technology firsthand. So today, I don't think that people are just buying a car. They are also looking at how the best mobility solution that will suit their lifestyle needs as well as sustainability goals.
The motor show will run until the end of the week.
And Chinese EV maker NIO is entering the Southeast Asia market for the first time, starting with Singapore. And Otelli, weren't you at the unveiling of its new lineup at the Singapore Motor Show?
I was, and what an exciting morning it was, because headlining that launch is NIO's right-hand drive Firefly, which is a compact electric hatchback. Now, NIO's pitching it as more than just another EV. Yes, it charges the usual way, but the brand is best known for battery swapping. Pull in, swap out, and drive off with a full battery in about 3 minutes at a swap station. Now, whether Singapore will get those stations anytime soon is still unconfirmed, but here is what's clear. NIO and battery giant CATL have signed a 5-year deal to develop longer life EV batteries, a tie-up that could sharpen NIO's tech edge. Well, NIO says 2026 will be its big push, targeting 40 countries and regions and aiming for annual sales growth of up to 50% going forward. Now, next on the map, Costa Rica, its first step into the Americas, and Uzbekistan, its first in Central Asia. And just days ago, NIO hit another milestone, its 1 millionth vehicle rolling off the line in Hefei, Anhui province, 7.5 years after it began mass production. So to find out how NIO plans to grow in this crowded EV space, I caught up with Chris Chen, Vice President of NIO Global Business. Firstly, congratulations, Chris, on NIO joining the million unit club.
Thank you.
Yeah. So we know that China's EV makers move insanely fast, right? And I'm curious to know, what is the one lesson you have learned from all that fierce competition back home that you have applied it overseas?
The essence to build up this brand is the product and service and also user community. Okay, this is making NIO different from the other brands. So product, we have our 12 full stack technology. We develop all of the technologies in-house. For example, we have this kind of a chip technology, and this is for autonomous driving. And for service, we have this kind of the innovative recharging services, like power swapping stations. So we're able to provide swapping services for the users. So users don't need to get in a line, wait for another 20 minutes, and charging for another 30 minutes. So you just click from the phone or from the center screen in the car and go to a swapping stations, get the battery swapped within 5 minutes. So this is a very innovative technology for recharging, and also community. Then we have over 170 and also 60, also 8 NIO houses in Europe and also in China. So this is sort of the container for users to gather together to enjoy a true lifestyle.
So you talked about the swappable battery, which is one of NIO's signature, which is 3 minutes. You put in the battery, it's fully automated, ready to go. But what if those rules don't apply in, say, other countries then? And then how do you approach approach this issue?
That requires a lot of work. Okay, we need to talk to the regulators. Okay, to help the regulators understand. Okay, this gadget. Okay, what is this, and what kind of the services this device provides. And also we need to talk to the tax bureaus. Okay, to set up the business models. And finally, okay, they approved this equipment, and we are able to start to roll out power swapping stations in Europe. We have already had 62 power swapping stations in Europe.
And NIO is also expanding. I mean, Singapore is your first Southeast Asia market. You're going to go to Costa Rica, Uzbekistan. Help us understand, in terms of your playbook, how do you decide where should NIO go next? Because they are very different markets.
China is taking over 36 or 40% of the global PV passenger vehicle sales. And then the US market and also European market. And when we select the market, first we should look at the market potential, right? Because we're doing a business. We want to make a profitable business. So whenever in the market we're going to, we try to see a great sales potential, right? Then that's going to support all of the investment required to penetrate into this market. Then we'll look at the market size. The second, we'll look at the policies. All right, there are many countries. Okay, they have like EV subsidies. All right, and there are many countries. Okay, they are very well developed for electric vehicles. There are also countries. Okay, who are a little bit later. So we look at the infrastructures and the policies, and to see if this is EV friendly, because we're selling an EV. And also we are looking at the geopolitical reasons, right? For example, the U.S. market is a tough market, and you have to have a local assembly, right, to make sure that you can sell cars in the U.S. market. And for example, the Turkish market is a little bit bumpy because their currency is not so stable. And so we look at the geopolitics and also all of the taxation systems. Then we decide, which market to go.
You mentioned the geopolitical situation, right? I mean, that plays a big part, and it is very uncertain in this current climate. For instance, US-EU tariffs, coming on hard and fast. How is NIO changing your global strategy?
To continue this journey, it definitely requires a lot more changes. For example, you cannot just export cars to a market and make money and leave. And you have to be responsible to contribute to the local community. We think we start to consider, for example, how to handle that 31% of the import tariff European Union applied on Chinese EV cars. I think perhaps in the future, when our vehicle sales reach to economic level, for example, we're able to sell 6,000 cars a month, then we need to think of the local assembly. I think we have this ambitious plan, but we need to really look at our business performances.
So do you think that there is a sense that some of the legacy automakers aren't taking enough risks and perhaps somewhat falling behind?
There are, because look at the sales numbers. They're losing the market share and heavily. And they're a little bit struggling to catch up the speed of the EV revolution in China. I think they are catching up, but they carry a lot of legacies. For example, if you look at the business at the moment, this is already predetermined a couple of years ago. Your product portfolio is already determined 3-4 years ago. So it's not easy to change. So if you lose your speed, then it might be a little bit harder to catch up. So that's the dilemma for the legacy OEMs.
So, Chris, if a Western automaker were to ask you very bluntly, is it still worth competing in China? What would you say to them?
Although the competition is high, but this is the automotive industry. This is not the industry that only one company will survive. So everyone will have the chance. It depends on how you can reshape your business structure to adapt to the competition. So I think everyone will have the chance, but I think the Chinese OEMs will have a better chance to survive and to succeed in this market.
Well, time now for another break, but coming up on East Asia tonight, China tightens controls on dual-use items bound for Japan. How should companies respond? And policymakers talk about de-risking or decoupling. Hello again, this is East Asia Tonight, and here are the headlines we're following. China looks to firm up strategic trade ties in Africa. Foreign Minister Wang Yi begins his annual tour of the continent in Ethiopia, home to the African Union. The US pulls out of dozens of international bodies that include key climate and health agencies, describing them as wasteful and no longer serving America's interests. China confirms it has accused scam mastermind Chen Zhi in custody after the founder of Prince Group was extradited from Cambodia. Now, earlier we spoke of the impact of the trade spat between China and Japan and how stocks of Japanese chemical producers are falling. The scope of the fallout appears to be widening from seafood imports to travel and now chemicals.
That's right, Otelli. Not just chemical producers, but also Japanese automakers who rely on imported rare earths for their hybrid motors as well as battery systems. Supply shocks could disrupt entire model lines. Now, for more insights on this, we bring in now global supply chain and logistics expert Wolfgang Lehmacher, who is joining us from Hong Kong. He's also the former head of supply chain and transport industries at the World Economic Forum. Wolfgang, good to have you on the show. Now, China banning dual-use exports to Japan for military use. What signal is this sending to the world and from Beijing? And how worried should Japanese industries be?
Yeah, what we are seeing is that security tools are now sending shockwaves through supply chain. We have a very good example here that it will impact chains and networks across the globe because we are looking at something that can cover 40% of trade. And as it covers equipment and important inputs, Japanese manufacturers will probably face delays, increasing cost. And when we look at the integration of Japan, Japan exports approximately one quarter of their goods exports to China and Hong Kong, and relies heavily on imports from China. So we will see that a lot of companies across the globe will monitor this very closely and run their analysis what this could mean for them.
So in the meantime, Wolfgang, Prime Minister Sanae Takaichi, well, she's urging Japanese firms to diversify and invest in crisis management. So in practical supply chain terms, what will that actually look like?
The direction is correct. Companies need to do something. They need to act. They need to run their analysis. The point I'm advocating is that when we talk about resilience and diversification, it cannot just mean less China. It should be less choke points in general. And when we look at recent disruptions, for example, Taiwan semiconductor, we see that companies react immediately and markets react immediately when there are only slight disruptions, for example, a fire in a fab. And what companies should do is they should look into their operations and see what are the factories, what are the suppliers, what are the logistics hubs that could stop production and make plans irrespectively of China to avoid that it ripples through their chains.
Wolfgang, you earlier warned that global supply chains are being weaponized. I mean, can you explain that idea? I mean, why should, for example, ordinary consumers actually care about this?
Because geopolitics, they show up at the checkout. When we look at how markets and prices react to such measures, we see immediately prices going up. So at the checkout, customers will see increasing prices. They will see stock outs, which means shortages. They may see a lack of diversity. They may even see down the road less innovation. So it means a lot. It's a driver of inflation and a driver of disruptions at home.
So you argue instead for right-shoring. Firstly, help us understand how is that different from friend-shoring, and how does it actually help companies navigate in today's geopolitical world?
I'm looking at right-shoring, friend-shoring, reshoring, offshoring. These are all terms, and these terms, they shape the way we look at the world. So when we look at friend-shoring, what does it mean? Who is a friend and who is not? And sometimes friends turn into non-friends. So it's a difficult term. Why am I looking at or advocating right-shoring is because right-shoring looks at what is best for the flow of goods, what is best for operations, and from a cost perspective, from a capability perspective, from a resilience perspective, from a security perspective, regulation. So, and not from a political perspective only, because we cannot build a resilient supply chain just by moving production out of China. Supply chains are global, they are very complex, very much integrated across many markets, and therefore companies need to run their analysis and think about what is the best for my supply chain. And when we think about right-shoring, this means you embrace everything, including China, but South Korea, Taiwan, the US, Europe. And when you do this, you will also think about improving relationships, improving ties with all these countries to ensure that your supply chain stands on solid grounds.
So looking ahead, give us a 5-10-year frame. I mean, what would you expect the supply chain map of East Asia to look like if, as you say, Japan, South Korea take the right-shoring seriously?
We will see a continuation of globalization. I have always said that globalization never stops. Globalization evolves. And a lot of countries are dependent on open supply chains, for example, in ASEAN. And for that reason, I see, when we think about 5 to 10 years down the road, again, a much more diverse landscape of chains and flow of goods, and much broader setup of chains, particularly in Asia, not only East Asia. And it is so hard to move or change or alter supply chains that all the concerns about, let's say, what will happen are probably overstated, and we will not move too much down the road of a far-reaching decoupling, because that would be a big strain on the global economy.
Many thanks for your insights there. Wolfgang Lehmacher, global supply chain and logistics expert, as well as former head of supply chain and transport industries at the World Economic Forum. Now, China has confirmed the extradition of alleged scam mastermind Chen Zhi from Cambodia. Chen, the founder of Prince Group, is accused of leading an international fraud ring that had extracted billions from unsuspecting victims. Well, Cambodia's central bank has ordered the liquidation of Prince Bank and suspended it from providing services. The bank is a part of Prince Holding Group headed by Chen. The conglomerate is one of Cambodia's biggest and is sanctioned by the US and the UK. Chen Zhi has been accused of running forced labor camps across Cambodia that have raked in billions from victims in so-called pig butchering scams. Victims are tricked by online fraudsters into giving them large sums of money over a period of time. while Chen allegedly laundered his ill-gotten gains through cryptocurrency and online gambling schemes. Prince Group denies those accusations. Now, in other news, Taiwan has temporarily grounded its F-16 fleet for inspection 2 days after one of its US-made fighter jet crashed into the sea. Well, Defense Minister Wellington Koo says an all-out effort is ongoing to find the pilot. 30 aircraft and more than 20 naval and coast guard vessels have been deployed. A ground search is also underway. The pilot, identified as 29-year-old Captain Sin, is believed to have ejected from his single-seat F-16V about 70 minutes after takeoff. He radioed, "Eject, eject, eject," just before the aircraft disappeared from radar. Mr. Koo says the inspection of the F-16 fleet is expected to wrap up by Saturday and that the process will not create gaps in Taiwan's air defenses. The island is upgrading its air defense capabilities amid concerns over China. The delivery of another 66 F-16Vs is expected this year. Coming up next on East Asia Tonight, autonomous driving platforms and new in-car software in focus at the Consumer Electronics Show in Las Vegas, highlighting how vehicle tech is increasingly reaching beyond just passenger cars. Now, the world's largest consumer electronics show, CES, wraps up tomorrow in Las Vegas. And analysts point to physical AI, namely robotics, taking center stage. And I've got CNA's Grace Shin joining us in the studio for lots more. So, Grace, robotics taking center stage really stood out at CES this year. How does it compare to previous years?
Well, this year it felt different because of the confidence. What used to be imagination and long-standing ideas, it really inched closer to reality. And robotics wasn't just presented as a distant future. Instead, it was something that's already taking shape. Across CES, we saw a lot of robots emerge every day into everyday environments, whether it be homes, hospitals, from factories to transport, making it clear that AI is no longer just software, it's physical AI. And that's why it's the key buzzword of CES, I believe, which means that AI is learning to act in the real world, not by just reading the internet. So that's why robots have been advancing more slowly compared to chatbots, even with this AI revolution. And that optimism was actually exhibited by the CES director himself, whom I spoke to. So take a listen to what he had to say.
To me, what's most exciting, what I've seen this year, is really that physical form of artificial intelligence really take shape. And you're seeing that show up in a couple of different areas, one being robotics.
So as John mentioned, there were many visuals that were just hard to miss, like humanoid robots became some of the biggest crowd pullers at CES. For instance, Hyundai Motor Group that owns Boston Dynamics shared plans to deploy humanoid robots like Atlas at scale. Its exact plans are to produce targets of up to 30,000 units annually by the year of 2028. And that signals that production-ready robots are finally moving just beyond prototypes. Also, we see players like the US, China, and Japan scaling up to be a part of this late machine race. And they want to make sure that all of their AI physical robots are working in human environments, not just on the factory assembly line. And analysts estimate that the global humanoid robot market, which is something to look out for this year when it comes to tech, it's already worth a few billion US dollars today. But this could grow very big to nearly 13 to maybe $50 billion by the end of this decade, depending on how quickly companies can actually scale up. And that makes humanoids one of the most closely watched and maybe hyped frontiers when it comes to tech.
I know there's so much talk about it, so much excitement and buzz behind it. But in reality, though, Grace, I mean, how close are we to actually having a humanoid robot in our everyday lives?
That's a central question because it's there that the tone shifts. So I spoke to the chief business officer of Japan SoftBank Robotics. And if you know, Japan used to be one of the pioneers when it comes to robotics. And this CBO explained that physical AI is fundamentally different from the AI systems most people are familiar with. Unlike chatbots or search engines, robots can't be trained on the internet. Instead, they have to learn by operating in the real world. Take a listen.
In case of the physical AI, there is no such data available on the internet. So we need to accumulate the data one by one through the teleoperation. So that's the reason why, to develop the genetic humanoid takes a huge time to accumulate the data.
Now, this expert gave a very practical example that helped me understand. So if I try to reenact, he talked to me about washroom cleaning robots. If you think about it, on paper, cleaning a washroom is quite simple. You just need to clean the washroom, right, if you're a human. But in reality, every washroom is different every second. The layout, the surface, how dirty it becomes. And that for a robot, that means learning how to recognize objects, avoid people, differentiate objects from people, and how much force to apply and adapt to constantly changing conditions. And that data can't be simulated easily. It must be collected in real washrooms, often with humans remotely stepping in to guide when that robot is stuck. So that's why SoftBank Robotics say building physical AI isn't something tech companies can do alone. This expert stressed that they need to cooperate with operational partners, whether it be facility management companies, logistics firms, manufacturers, and that is all to deploy these genetic robots in real life and gather real-world data. And some companies even provide products like humanoid robots at a very low price to households, relatively lower price, to accumulate more training data and improve their systems, underscoring the importance of just how data-hungry physical AI is. Another restraint is definitely cost. Today's advanced humanoid robots can cost anywhere from tens of thousands all the way over to $200,000 US per unit, which shows that deployment could be limited to factories, warehouses, and pilot projects. So while humanoid robots dominated the visuals at CES, no doubt, most real deployments today are still narrow and very task-specific, such as cleaning, stocking, and moving goods, and they're not yet there as to being deployed for general-purpose helpers at home.
Okay, so it is happening. We just don't quite know when yet.
Exactly.
Well, thanks so much for speaking to us on the CES Tech Show in Las Vegas. Now, traditionally, America's giant tech show CES was the place for car makers to debut new electric vehicles. But this year, not so much. Instead, self-driving cars are taking over. And CNA's Kate Fisher reports from CES in Las Vegas.
From planes to sports cars to £60,000 combine harvesters, autonomous technology is part of nearly every vehicle showcased at CES this year.
We have a customer here in the booth, and he has told us that he can see 30% productivity with the use of our automation packages.
It's a sign of the future of farming, but entirely self-driving tractors may still be some way off. Robotaxis, though, they're already here. Zook says it already has 50 of these vehicles in operation across Las Vegas and San Francisco, and it's trialing them in many more cities across the US, including Miami, Atlanta, and Washington, D.C. It's a competitive space. Alphabet-owned Waymo is already driving across 4 US cities with plans to expand globally this year, while Uber unveiled its new robotaxi at CES, a collaboration with Lucid Motors and Neuro using NVIDIA computing.
Self-driving vehicles are an amazing example of how AI is working. We use an AI autonomy foundation model that basically learns as it goes along. So as we're driving, as we're testing, both on-road and in simulations, it gets better and better at driving.
But that learning is fueled by the collection of personal data, leading to privacy concerns. And in the case of countries like Italy, even questions over national security. The Italian government is supporting this self-driving car project in a bid to ensure it has control over the technology.
It has cameras, it has some stuff which can be very powerful for other nations to have inside your streets, basically. And that's why Europe is now moving towards autonomous vehicle regulation. And that's why it's very important for each country to have its own and its very own technology. And it's why Italy is in the very first place doing that.
As self-driving cars speed ahead, electric vehicles have taken a back seat at this year's show. It reflects the sales slump in the US after the Trump administration's pullback from EV-friendly incentives and investments dampened demand there. It's forced many automakers to rethink their strategies as EV markets advanced elsewhere. China's BYD has overtaken Elon Musk's Tesla as the world's biggest seller of EVs, marking the first time it's outpaced its American rival in annual sales.
In the U.S. market, we've seen things kind of stall, and that's reflected in the Tesla numbers and the fact that we don't necessarily have the infrastructure, all the charging stations we need for people in the U.S. to feel comfortable about it. At the same time, the U.S. government took away the tax benefit of buying an EV, so that also hurt sales. In China, we haven't seen that. There still continue to be incentives. There's a lot more development happening.
As China takes the wheel from the US on electric vehicles, US manufacturers like luxury rideshare company Plight are rejecting steering wheels altogether, shifting their focus and investment to self-driving cars. For CNA, I'm Kate Fisher in Las Vegas.
And that wraps up Thursday's edition of East Asia Tonight. Don't forget your headlines anytime at cna.asia. Thanks for watching.